Hi guys, John here, Forex Fire, and what I'm going to do tonight, I did a video late last night on GBP, NZD, giving you an analysis and a look at supply and demand. I'm going to try and do another one now. Again, even though this is recorded, I do these on the fly, so if there is any mistakes, you will see them right here. Because at the end of the day, I'm not bothered if I make a mistake. I just basically record it and set it straight on the fly. Let's take a look. Share my screen. So what we've got is we're going to do from the monthly. Okay, and I've been looking at the start of the monthly anyway. We've got this downtrend. We started coming up. We've slowly, and I'm just going to highlight a few things. Okay, so it's got this here, this here. It's created a triangle. Okay, but take note. This here. Okay, we broke out of this area a long time ago. Okay, we broke out that area a long time ago. Now, what has happened if we get the magic wand? This here, okay, as we broke out, we broke that structure. Okay, so between that leg, okay, between that leg, it's then telling you it's on a trend reversal. Okay, although be it this is a downtrend here, because this here have broke the structure of these two previous sort of lower highs on this downtrend. It's broken the structure. We are now in a trend reversal heading towards an uptrend, simply because we've got a ground base here. You've got a high, you've got a higher high, you've come down, you've got a higher low, you've come up, we haven't surpassed this. Okay, so again, you've got a high point here, but it's a lower high from here. We've come down. We've more or less, we just get rid of the noise. Again, it isn't imperative from here, but we're just looking for a standpoint. You've got like a bit of liquidity across there. Okay. If we do that from here, we've got liquidity here. So again, what we're looking at from a standpoint is a supply and demand zone. Supply and demand is a bit like a support and resistance, but within a zoned area of a candle. Okay, so we're going to mark the monthly one up first of all. And again, we're going to be drilling it down to the 1 hour, looking for refined entries. This isn't massively imperative, but it will give us areas to look at towards as the price moves down into the monthly, if that makes sense. So the last down before the up. Let's have a look. Rectangle. We've got that there. Pull this along. Wick to wick. And we are going to put our template on. This would be a demand on all right. See if ours demand M for monthly. Okay, so we'll save that on there. And we are looking at possibly a smaller area, because what we're waiting for in essence, guys, okay, what we're waiting for in essence is when you've got the push up, okay, which we have here, we are looking for the reversal. You're looking for that reversal of price to come back down to give us a mitigation of 50% of the zone, okay? Mitigation of 50%. So even though price is miles away, it's going to do no harm to mark this area up as well for future reference, okay? Put this in here. So there's our demand zones below. We've got two floors, okay? So now we're looking on the above, on the ceiling. Again, supply is on the ceiling. So let's just draw out that. We look to the left, okay? So when you identify where price is, you look to the left of that there, you look for structure points which are on this occasion higher than. Okay, so we're looking at that. So we're just going to get our box, wick to wick. And again, you'll see on here, okay, I'm just going to highlight this, guys. You see on here, as we have pushed out, okay, as we've pushed out of the monthly of the zone, it's come back to test the zone. Hasn't given us a quarter or a 50%, but it's come back to test. It's on its way back there at the moment. Again, just get rid of this. This here is our supply. Supply 1 month, so we put supply M. So that's there. And then we're going to look at one more, possibly one more zonal area. Look to the left again. The last buy before the sell. Again. Supply 1 month. Supply M. Right, so that's the monthly. So we've got our range, okay? We've got our range. So we're working between this range here, to be fair. Let's go down to the daily. And we've got a lot more movement within price on here. Let's take a look. Structural points. We've got a bias of, we are certainly bullish, okay? We are bullish. So let's just, from a structural point, look at the last sell before the buy. Again, our demand areas, because we are above this price action at the moment. So this is the demand, daily demand. Demand D. Okay. Again, you want it to be very structural, these points, to be honest. This here, even though it's the last down before the maneuver up, you're then mitigating into the area, so I wouldn't take any notice of that. Let's just take a look. This is a structural point. We'll take one here. Demand daily. And we'll take one more. This one here. Demand daily. Right. And then as we look at the bigger picture, we'll go back to the monthly. Okay, and you can see it's starting to play out. We've got our bigger frame going into the inside of the bigger frame. We're going into the smaller picture. From there, let's go back down to the daily. And then from there, we'll take it down to the hourly. Now, we've got at the moment, you've been bullish, okay? But at the minute, we've got liquidity building, okay? So this here, perfect example to be fair. This here, as we've sort of coming along and building at equal highs and lows, This is called a distribution because we're on the higher side, okay? So we're just going to minimize that. And what we'll do is so we're looking for supply areas above the current price action. So the supply area is the last buy before the sell. And these are supply 1 hour. Okay. And look to the left. Is there any more? There's nothing more, to be fair. So this is a very significant area in that respect. So from there, we're looking down. Depending on how the market's open, we can't use this as a demand area at the moment. However, we can on this because this has been fully done, if that makes sense. Demand 1 hour. Okay. On the lower side, we can have a look at this. We'll go on here, coordinates, we'll go along to 1,000. This will be a demand 1 hour. Okay. So what we've got, if price was to shoot through, it comes up to here. If price was to shoot up here, mitigate off here, come down, okay? Because we are on a distribution area at the moment. It may take out the liquidity on the lower side as well and then come to here. And again, if there is a massive move, it may even come down to here, okay? So what we're going to do, we're going to draw up price at the moment. Just bear with me. And we'll make a bit of a prediction. So supply zone area on a short, 50%. Just above the wick. We'll be looking for it to come down into 50% of that. Okay, again, we spoke on the video last night with regards to the GBP and ZD. What you could do is set a 50% on this. Okay. If it was to come to that, you could have take partial 50%. Okay, all that means is you've got an alarm set. Okay, let's take a look. Once per bar close, set an alarm, take partial 50%, move SL to break even. So when that happens is what will happen is, let's get this on here. Once this comes down to this area, if it comes up, mitigates, comes down, hits that, your alarm will be set. You're going to close out half of your trade, okay, and move the SL to break even, okay. So if this was to come back in reverse, hit your entry, you've took at least half the trade. You've then getting on this occasion a risk to reward return of just under that 2% or just over the 2%, to be fair. From there, we're going to target a little bit lower down and hoping we're going to take out these liquidity areas. This is going to give you a 1 to 9. But again, you will get an alarm from this to tell you, you'll get an alarm from this to tell you to take a partial. Okay, so I'm just going to scroll out. We do have the higher side and a big area on the monthly. Again, remember, these areas here, just scroll out. We'll go on to the daily. So those were the monthlies, okay? Now you're talking to go on to this sort of area, measurement-wise. There's 430 odd pips just to go into mitigation of that supply monthly. And just on that, you're talking well over 1,000. So to get any movement into that is really, really, really far in the future. Okay. We are concentrating on a smaller sort of entity. Again, to get our movement at the moment onto the price action and to mitigate into that area, you're only looking for a 40 pip move. Risk 1% on this, okay? If this was, because this is on the high side as well, guys, if the high side with regards to the supply area, if this was to mitigate off that and then start to reverse down, we would have our 1 hour demand areas here. Just below liquidity areas, you've got another demand area, which we would possibly take it to here, to be fair. At the moment, we're in a distribution phase on the actual uptrend from here. From there, you've then went into a distribution across. We will be looking for another push up into the entry or the mitigation. And then from there, we'll be looking for the push down into the second lower area of the 1 hour demand, with taking out partials of this here on this line of the 50%. Okay, so I hope that's made a little bit of sense. That's a quick insight on the EurJpy, where I see it from. Again, they don't always work out, but working on a supply and demand area, you can sort of condense what you're seeing from a bigger picture down to a daily, down to a 1 hour. And the benefit of when these break the structure from that and they head into the daily, you're going to have a lot more movements with regards to price action inside of the daily. And from when you do that inside of the zone on the daily, you can then condense the refinement within that zone, within this zone here, where we are in here, within this zone here. You can condense that, okay, to even more movements within the pips and the structure, if that makes sense. So that's enough for me waffling on. Please comment, please like, please subscribe to the channel on this YouTube if you want to see more of these. I'm going to put this on my wall at the moment. And again, let's just take a look. Right, so publish. I'll do this while we're on the video live, to be fair. Publish EurJpy, sell EurJpy, looking for the sell on smart money on supply area, taking it down to the lower demand. Let's see how this works out. Right, so again, we're going on the shorts. We're going to go to the category trend analysis, Twitter tags. We're going to go EurJpy. Smart money concept, and smart money trading. Right, so that's set. Just publish that in the area, and we'll keep an eye on these. Again, guys, if you can be so kind, subscribe to the channel. From there, I'm going to quickly have a look on some previous ones, to be fair, just so you can see the sort of the success rate that we've been having with this sort of technique. So we're just waiting for this to load up. Right, so if we go back to my profile, you can search for me on TradingView, Forex Fire. Got the reputation, 70 IDs have been put on there, 267 likes, currently 124 followers. So if we go back to the 20th of April, we can have a look to see where we are. This is one of the ones that we called out. Again, didn't quite hit TP, but you could have took partials from the structure point. That was a 1 to 7, so you probably could have gotten a 3% growth on that, to be fair. Let's take a look. Again, Euro odd. Didn't think this one triggered, but we went from another swing point, to be fair. Yeah, it didn't quite trigger on that one, but I do know it triggered further up. GP NZD. Again, triggered in nicely. It hasn't quite hit the TP of 3.96. It's on its way. No doubt it'll do that when the market's open. GBP USD had a fantastic one on this. We had an 8%, and then we were going into a 4.29. It's more or less hit that. Nearly a good 12% trade on that. This was the Euro odd long we got back in on, okay, from another swing point on a demand zone. Again, a risk and reward of 1 to 7. We went to 3, just over halfway of that. So again, to the pip entry with just a 14 pip stop loss. And then this one was a double sort of edging one. If we had entry on here and it doubled out on here on the stop loss, or we're not lost because we only lost 1%. However, this was going down to a 1 to 5.66, and it was on its way to that. And if we get rid of that, this is a one from last night that I have not set. It hasn't set yet because we just did this 23 hours ago when the market to close. GP NZD and a EurJpy. We'll see where these ones go. Okay, guys. So if you can be so kind, please follow me on TradingView Forex Fire. You can search. Obviously, you're on YouTube here, so you've got the YouTube links. Go to forexfiremembers.com. Okay, if you go to forexfiremembers.com, this will give you my blog area, about me, contact me, my Facebook page, YouTube channel, free Discord area. The free Discord area, you can come along and learn these techniques. I've got many people that are kindly dropping comments on how I've helped them and what I do to help them with their progression. I always get back to each and every person that connects with me. That's what I'm here for at the end of the year. Forex is my passion, and helping people. Especially my Discord, we have a 3-step journey for people. We get you confident, we get you consistent, and then we get you profitable. From there, we get on a personal chat, a personal call, personal one-on-one. We can take you from molding them 3 steps together and then structuring you to go on the funded path, which means we'll point you in the right direction with a more structured approach to become not just confident, consistent, and profitable. We take you on that further journey of being more disciplined, more in your mindset, and also give you that structured path, that personal journey, that personal business plan to be able to become a funded trader. Okay, guys. So I hope you're enjoying the content I put out there. I'll see you all later. Bye.